All right, guys, back to work. Back to work. Hope you guys had a fantastic day. Well, the FOMC is out. Earnings are out. The markets must love what they heard here today because we got the reversal we talked about last night, and this thing just went up and up and up with a big move going higher pretty much all day today. You know this already. Now, most importantly, anytime I see a big move we saw today, there are two types of trades I always look for the following day. They're both pretty easy to learn, and they're both pretty consistent to make money. My personal opinion, I think the second trade for tomorrow is kind of the easier way to make money. I'm going to cover both of those trades, of course, in tonight's video. We'll cover entries, exits, time of the best entries. Not to worry, by the time we're done tonight, you'll have an easy roadmap to make some money on Thursday morning. Before we jump in, though, and talk about those two favorite trades after a big move like this, make sure you subscribe to our channel because you don't want to miss tomorrow night's video, right? So make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me, will ya? And as always, give me a heck yeah, give me a shout out down in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro, though. Let's go make some money on Thursday morning. Now, charts are all ready to go. As you can see, NASDAQ triple Qs are all ready. Oh, the E-mini and the SPY is ready. I've got three very simple but important clues right now on these charts in front of me that are telling us where the winning trades are setting up for Thursday morning. One of those important clues is right here on the 60-minute, the hourly time frames. It's easy to see right now the buyers have a great reversal off this low, but I'll tell you, we're still a pretty bear market overall. We had that trading range here on the 60-minute time frame. You'll notice we got that beautiful reversal, that rotation off the low. That's a very bullish signal. We got beautiful separation off the 21 EMA. Remember, separation is strength in my eyes. Remember, though, we're still pretty bearish overall after that big move down we saw the last few weeks on both the NASDAQ and the E-mini. This is looking like the buyers have a golden opportunity right now. But you know, they have to pull back and hold. They have to pull back to that 21 EMA, and they have to hold that pullback. They have to prove to us, hold that pullback, show me you really mean this, and then we can call this officially a bull market for tomorrow. That's one really important clue. Remember, though, I like to use these 60-minute charts, though, for the overall directional bias, right? Higher time frame chart, directional bias. This is not going to help us time the entries for tomorrow. So I get some long entries, some short entries for tomorrow. I have two, I think, more important clues on the tick charts, some faster time frames that will help us kind of bring this all together and time the best entries for tomorrow. Before we dive into those faster time frames and talk about entries, why don't we check our schedule for tomorrow? Because there is three things on my radar for tomorrow that you might want to have on yours as well. First things first, tomorrow is the first of the month. Remember, anytime we transition from one month into another month, there's always going to be an uptick in volatility. And boy, do we see that over the past couple days. So end of the month volatility is always on our radar. Next up, second thing for tomorrow is the big ISM manufacturing index at 10 o'clock Eastern time. Yeah, that PMI number's not too shabby either. So you probably lumped it in together there, PMI and ISM. The ISM manufacturing number, though, is going to be the biggest market catalyst tomorrow morning, at least that we know about here for tomorrow. And in case you haven't been paying attention, in case you've been living under a rock, we have the big kahuna, the granddaddy, right? Whatever you want to call it, the big, kind of the climax of the earnings season. The 3-week season. Tomorrow night, we hear from Amazon and Apple. They are a huge behemoth, big market cap. This will be a major market catalyst. So remember, anytime we have big news in the afternoon, like an FOMC or a big earnings, be careful after lunch. Markets do funny things. Summertime trading, lower volume, ahead of those big earnings reports tomorrow afternoon. So we'll talk more about the Amazon, Apple reports tomorrow night, but keep your eyes on that end of the month volatility and 10 o'clock ISM manufacturing. Now, let's get back to our charts, though, because you know by now, right? It's good to know when the news is, but we make our money trading off these charts here. We talked about before how the buyers have just a golden opportunity right now, but the bears, they may not go down without a fight here right now. Buyers will hold that pullback, or else these bears are going to run this thing back down into that range below us. Let's talk about entry timing, because again, we're not going to use a 60-minute time frame to time the entries, right? That's a whole lot more difficult than it needs to be here. I like to use tick charts to time the best entries. Tick charts make pattern recognition a whole lot easier. And by the way, all the time frames here are in the upper left-hand corner. They're all tick chart, 7,000 tick chart. And if you're watching for the first time right now, welcome to the channel. Thanks for joining us. That yellow line right there is the only indicator we need to make money. It's the 21 EMA. Now, I mentioned earlier, I have two more important clues on these tick charts. One of them right here, pretty obvious, right? Had that beautiful pop up, and the market starts to grind, grind, and grind. Now, we talk a lot about these on these videos. What do we do when a market pops up and grinds higher? It's pretty simple, right? We draw a trend line off the highs. We anchor that trend line off that big low. And then what's the secret? The secret is look left, find some prior swings, and I want that first test, right? First test is the best test. So one really, I think, pretty obvious clue here, especially if you guys watch my videos quite a bit, is that pop and grind channel. Looking for that first test is the best test, a great spot to buy a pullback if you're a buyer right now. The second big clue here is just the sheer size of this move. Anytime I see a big move like this, there are two types of trades I always look for the following day. Again, they're both very easy to learn, and they're both pretty darn reliable and consistent to make money with. The second one, which we'll cover in a moment on the NASDAQ a bit later on in the video, I think is a bit easier to make money with. So you'll want to stick around all the way to the end on the NASDAQ. We'll talk about that second one here. But first though, the most common situation after a big move like this is nobody wants to buy way up here, right? It's way too high to buy. I want to buy nice and low. Now, I got an idea of where I want to buy, but in most cases though, a two-legged pullback is usually the best way to time the entries. A two-legged pullback and a retest of the high. Now, because we're so bearish overall right now, I'd love to look for a reversal off of that high. So guys, there are ways to make money on this during the two-legged pullback. There are ways to make money on the reversal off of that high. So let's talk about that because we'll cover some of my favorite entry patterns and some variations of this as we go deeper in this video tonight. So two-legged pullbacks. When I say two-legged pullback, I want you to think about a measured move, a little bit more than a measured move. All right. I have no crystal ball. I don't know what it will do overnight. What I do know though is I want to find that, again, it's a measured move that goes a bit too far. That will get us kind of overextended on the pullback. Now, the best part about this is that once this now begins to pull back to that 21 EMA, I don't need to pick the bottom on this. I can't predict the future. I don't have a crystal ball. I don't know how far that thing will go. Again, it's a pretty overall bear market still, like I mentioned earlier, on the 60-minute time frame. So I'm not going to blindly buy into it. What I'll do is wait for the bears to come in and think this now is a reversal. Now remember, big move up. Very likely we go back to retest the high before we dump back down again with the overall bear market. So if I can get that two-legged pullback, this is a horrible spot to be selling, right? If you want to sell high. Do not sell low. But you know what? There are new rookies that come into the markets every single day, right? We've all been there before, and we don't have the experience yet to know better than to chase that move going lower. So once those rookie bears try once they try twice, now we got you, right? As we say in our trade room, now you're trapped, right? And now I can use your stops to fuel that move going higher. Remember, we don't make the rookie mistake and blindly buy the pullback, right? We wait for the rookie bears to come in, let them try twice. Remember, higher high, one try, two try, and basically squeeze those stops running higher. Now, watch very closely because as it goes higher, buyers are going to scramble to get into this before it retests the high. This is where bear trap patterns are your bread and butter. There's two types of bear traps I'm looking for. One is kind of a classic technical bear trap. It's going to be a separation off the moving average, a higher high in price, and move right below that low. Again, the target here is to go back up and retest the high. In my free video courses, I call these failure patterns, a two-try failure, into a classic kind of technical bear trap pattern. It'll separate off the moving average, it's a higher high in price, and move right below that low, strong green candle, and you're gonna wanna get this before we go back up and take out that high. Here's one variation that you wanna be kind of aware of on that, because this happens a lot too. If we get that two-legged pullback, again, we're not gonna pick the bottom on this, right? We'll trap the bears in, 1, 2. That's the easy one. The failure pattern is always the easiest. It's kind of what everyone learns first. Very, very good strategy. As it pops up, oftentimes, because we're so bearish overall, the market will try to run back down and take out that low. Okay, watch really closely here right now. What will happen is as the bears start chasing it, once, twice, higher high, and a bear trap right there. This one is a bit more advanced, right? Again, it's a failure pattern and a trap pattern, right? We teach this stuff, of course, in the free video course. But the trick is, it's that two-legged pullback. Don't pick the bottom, right? Trap the bears in, a failure pattern. And again, as it begins to run higher, look for that technical bear trap. The one had the first example. Or if it rolls over here a little bit, right, then trap the bears below that 21 EMA. The trick is keep trapping those bears in. Keep trapping those bears in. 1, 2, squeeze the stops, back up to retest the high. I'm getting excited right now just kind of talking about this right now. Now, let's slow down for a second because I know for most of you guys and gals watching right now, you know these patterns. You're making money with failures and traps. You know why we love this stuff so much in our trade room. But if you're here for the first time right now, this might be a brand new language for you. What are failures? How do we trap traders and run stops to make easy profit? Don't you worry. I teach the entire strategy. I have hundreds, if not more than hundreds, examples of failures, traps, a whole lot more. I cover everything in our free video classes. I'll put a link up top for you, upper right-hand corner. Grab that link that popped up and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick. You'll be surprised how simple it is. A trick we use in our members trade room, so we always know where the best winning trades are going to be every day. Most importantly, I want to help you guys start making money on your own. I'll teach you 4 my favorite entry patterns, failures, traps, a whole lot more, of course. Guys, the markets are too good right now. If you're not making consistent money, if you're missing the best entries each day, that free course is perfect for anyone who is serious about making money in these markets. So grab the link up top there, take that free course, learn the roadmap I'm talking about here tonight in this video. And also keep in mind too, if you can't get the link up top there, I'm going to put all the important links tonight in the description of the YouTube video, but the free class links down there. Start there first, learn the roadmap. We trade together every day in our trade room. I'll put trade room membership links down there for you. And also too, if you're on Twitter or X, I post a ton of updates, charts, videos, mindset stuff on Twitter X. If you're on Twitter X, give me a follow. Again, all the details, description of that YouTube video. And again, take that free course first though, because that will give you a lot more examples and the rules I use to get that two-legged pullback, trap those bears in, squeeze those stops, and again, look for that technical bear trap, or if they pop it up, roll it over, how to trap them in from there as well with that higher high. A lot of examples of that, of course, in that free video course. Now, I want to go forward and talk about that second key setup for tomorrow, but let's talk about some more variations, because as much as I would love to get that crystal clear two-legged pullback, trap them in and back up again, let's talk about some different variations. That way you're prepared if we get some not so perfect setups for tomorrow. For example, we oftentimes see those deep two-legged pullbacks. We oftentimes will get that 1, 2, right? Trapping those bears. The market will run up and it will hold off a prior area resistance and will run back down and take out that low. Remember, it's overall bear market still, even though pretty bullish here on this tick chart, right? Now, if they go back to retest the low, the way I look at this is anybody who sold short right here, they will take their profit at that low. Now, I'll be watching to see if it keeps going. This will be a bearish reversal, and we'll cover that a bit later on in the video here tonight. But if I start seeing if these bears come in and they start struggling with 1, with 2, now remember, why 2? 2 tries, because I'm not going to pick a bottom on this. I want to leverage the stops, right? I want to squeeze those stops right here, because if you're caught short, and again, not a good spot to be selling. If you want to sell high, right? Don't sell low. Rookies are selling down here. Bears once, bears twice. Squeeze those stops. And again, same idea, right? The market wants to go back up and take out that big high again because of that big move going higher here. So again, look for that failure pattern into that classic. Remember, the key to this is you want that separation, right? You want to get that slight separation off the moving average there, higher high in price, and right below that low. These are called double bottom retest. It's a deep, deep pullback. Because of that deep pullback, it gives the bears momentum now to retest that low. But again, unless they continue that move going lower, this is a great spot to trap in some rookie sellers with a seller failure pattern and use a bear trap pattern as you run back up to retest the high. And of course, one more variation on this is a V bottom, right? I want to get that run lower. I want to get that 1-2 back up again, right? But sometimes we don't get it, right? Sometimes we get this V bottom where it runs lower and there's so many buyers down here, it just whoop and it just runs right back up into that trading range. These can be very frustrating, right? Because you don't get the good signal to trap in those bears. I know, not my favorite situation, but here's the way I always trade them. If we V bottom off that low, most of the time it begins to grind and run higher. Now, we talked earlier about how we trade these pop and grinds, right? What do? We mark a trend line off the high. We bring that trend line down off of that low. We look left. We find some prior swings. And as always, we don't miss that first test is the best test. Now, of course, I'm keeping it simple right now. I can't teach everything in these YouTube videos. This could be a bear trap. Look at me showing you here. It could be buyer failure pattern, a seller failure pattern, a pullback combination. So any of the entry patterns you guys are learning in that free video course I mentioned earlier can be applied off the low of that channel. All right, guys? Now, I have one more thing to keep in mind here. We always want the deep pullback, right? After a big move like this, I want the deep pullback. If I was to, for example, get a very shallow pullback, how would I buy a shallow pullback right now? What's the problem? The problem is I'm not buying low. Remember, if I get a deep pullback, the challenge is momentum, right? All that bear momentum. That's why I like to use a failure pattern to time the entry going back up again. If all I get is a shallow pullback, the problem isn't momentum anymore. The problem now is location. I'm buying too high relative to that big move we saw today. So anytime I see a shallow pullback after a big move, we always think about one entry pattern. It's always a trap. Now, trap patterns are always the best ones because it's the best to get you in as low as possible, right? So bear trap, bears try once, we go higher. Bears try twice. We go underneath that low, right? That is your trap signal. There was one this afternoon right there, right? We go up. We go higher, high, right? Higher, high in price. Below that low, it is no surprise. Everybody was trying to buy underneath that low. Look for that pattern. Again, if we don't get that deep pullback, if all we get is that one-legged pullback. All right, so now we've covered kind of the first scenario, right? That pullback scenario. We covered deep pullbacks, V bottoms, double bottom retest. And again, I know this is a lot to learn at first, but again, I think this will make a lot more sense once you take that free video course I mentioned, again, linked up top there, upper right-hand corner, or of course down in the description of this video. Right? That'll give you a lot more of a roadmap to follow, and these will make a lot more sense. Now let's talk about that second strategy, right, on the NASDAQ here now, because I'm sure everyone's wondering, okay, the pullback I think is pretty obvious. Everybody wants a pullback right now on the NASDAQ here. And again, nothing is different here on the NQ, right? We're very bearish over the past few weeks. That trading range, beautiful kind of slingshot reversals, we call them, off of that trading range. Beautiful separation is strength off the moving average. But again, with all that bear momentum before, we have to give the sellers the benefit of the doubt. Don't be so quick to flip things bullish here just because we've seen a nice strong pop off this low. The buyers have to hold this pullback in order for us to take them seriously right now. If not, they're going to wind up running all the way back down, taking out that low. This creates one big triangle here. So buyers, I'm rooting for you right now, but again, I'm not quite convinced yet these buyers have full control. We'll see what happens, of course, tomorrow. Back to our tick charts again, a 4,000 tick chart this time on the NQ or the triple Qs, and just a gorgeous example of that pop and grind, mark off that high, mark off that low, look left, right, find those prior swings, and that, of course, is usually where the buyers are waiting to gobble up that deep pullback. It's a big move higher, as I mentioned earlier, on the S&P, and just like any time we have a big move higher, it's that, again, two different types of trades we look for. One of them we outlined earlier on the S&P. It's that two-legged pullback. Again, a bit more than a measured move. We don't pick that bottom, right? We wait for the price to pull back. We trap the bears in with a failure pattern into a technical bear trap pattern. And again, that bear trap pattern, sometimes what will happen is it'll pop up. They'll get a little bull trap above the highs. It'll try to run lower. It won't officially take out that low yet. Try to run lower. And there's kind of that hybrid 1, 2, higher high in price, right? That is a gorgeous setup right there. So again, small difference, right? Failure pattern, bear trap pattern. Why different, right? The bear trap is necessary whenever you're trying to buy low, right? I don't have that problem when you're buying on the two-legged pullback. And again, we talked about double bottoms, right? Double bottoms, V bottoms, and some variations of this already on the first chart there. Let's talk about now the second scenario, which in all reality is probably easier to make money in the long term. And that, of course, is a trading range. Now, right now, I have a range up here I'm watching, but we may keep on going higher here. We may end up going sideways here into a trading range for tomorrow. We have some big earnings tomorrow night, so don't be surprised if we go sideways here in a new trading range. There are plenty of ways to make money in a range-bound market. Many of you guys know that ranges are my favorite type of market because they are so easy to make money with. So bullish into a trading range. The most important thing you want to learn about ranges, and of course we talk a lot more about these in the free video course, is that ranges love to rotate, right? They rotate back and forth like a pendulum, right? The amount above, the amount below. We look for things like triangles, expanding triangles, and megaphones. And so we basically buy low, sell high, and trade that rotation. So if you understand that basic principle of how ranges work on this, it becomes pretty easy, right? If I see a range develop tomorrow morning, what I'll do is I'm going to find levels of support underneath me. I'm going to wait for a pullback underneath that range. And again, I'm not going to pick the bottom on this because for all I know, the NASDAQ will do NASDAQ things, right? It'll keep on rolling and then pop back up, right? So it's difficult to pick the bottom on these. I would much rather, though, wait for that 21 EMA to come over, let those bears commit off this, right? Because again, this is the last place you want to sell, right? One of the easiest ways to make money is going to put yourself in the shoes of inexperienced traders. Where do you think is the worst place to sell? Underneath a bullish range like this at a key level support, right? So just let those bears, let them wrap that rope around their neck. Pardon the illustration on that, right? But it's true, right? Let them dig their own grave, use those stops to squeeze it back higher. Now, this is where the magic happens in ranges. And again, this is why I think ranges are a little more profitable than trending markets. As we go higher here, remember, as we go higher, it's always going to be, what was that pattern again? It's always going to be that bear trap pattern, right? It's that separation off the moving average, right? That shallow pullback doesn't quite pull back, moving average, right? Separation off that moving average. When it separates, remember, separation means strength. Mark the high, or don't mark the high, but higher high, find that low, and we're right below that low, right, for your bear trap. Same basic idea, right? Two-try failure in a bear trap. Here's where things get fun because now we know that ranges love to rotate, right? So the amount below the range, project that now above the range, and that now becomes our final objective. What I always do is I take a big chunk of profit off at the top of that trading range because you never know what's going to happen there, and leave a little quarter of the position, eighth of the position, right? Leave at least a little bit of runner there up to that pendulum swing. And I'll tell you, if that happens tomorrow, this may, like we saw today, right? It may rotate off that low and it may never come back, right? We may get that. That may be the kind of the ice on the cake there tomorrow for a nice bullish reversal on the 60-minute time frame. So that's one way to look at a trading range. Now, let's kick this up one more notch, right? Because this is where things get more complicated, but you need to learn this, okay? So one more scenario here for a trading range, and this would be a good idea to keep in mind for reversal back to the bear side tomorrow. A bullish range here now. Remember, ranges love to rotate. One very common scenario is a fake out breakout. What happens is we end up going above that trading range. What happens is rookies will chase after it. You do not want to buy above a trading range after such a big move going higher. I don't care what the guy on Twitter says. I don't care what the news media says, right? We do not want to buy high above a trading range because ranges act like magnets. We're already very high up right now. If this thing just blasts higher, right, we can then buy a breakout pullback. We'll cover that bridge tomorrow once we get in the trading, right? So if it really blasts above it, obviously we'll buy a breakout pullback off that trading range. But in most cases though, after a big move up like this little move above the range is just a fake out breakout. Now what happens oftentimes is this thing ends up whipping right back down again. Now remember, ranges love to rotate. The amount above the range, the amount below the range. Aha, I see you. I now know where I want to buy this thing as it rotates back up again. Again though, for all I know, it'll keep on going, right? We're not going to make that rookie mistake and blindly buy into that area here. We'll use that same 1 try, 2 try, failure into trap, combination, profit off at the top of the range, and again, profit off at the pendulum swing on the opposite side. Let's talk one more variation of this. Very, very important. Very, very important. If we rotate off that high, okay, very important. Please pay attention right now. If we rotate off that high and we start to grind, separate off that moving average, that, my friends, are the bears coming back in and reminding us who owns this market right now, right? This could easily be the reversal we see tomorrow. We fake out, breakout high. We rope in all the rookies, right, who are drinking the Kool-Aid right now. Think it's reversed. It is not reversed yet, according to the 60-minute time frame. It then slingshots off that high. It takes out the pendulum swing of the side, and we don't get the bears trying once, twice, back up again. No, right? Now we separate off the moving average, we grind down. That's almost a guaranteed signal. The bears are back in the building, baby, right? They're back at work now, and now what do? What do you do when the market grinds down like that? You know how to do this. You mark off that low, you pin up around the highs. What do? You look left, you find some prior swings, and you don't miss what? That first test is the best test off that high. So a very common way a bullish move like this turns back to the overall bear trend is that I call these slingshot reversals, right? Because what it does is it slingshots right off that high. It blows right through the pendulum swing, that symmetrical pendulum swing. It blows right through it. It grinds down. And whatever you do, please do not chase after this thing going lower. If you learn one thing from these videos, we sell high. We don't sell low. We buy low. We don't sell low, right? So if it grinds down like that, we don't want to chase after it. We want to wait for that pop up. And again, this could be a bull trap. It could be a buyer failure, a pullback combination. Well, again, you'll learn more of the entry tactics in the free video course I mentioned earlier. All right, guys, that's the game plan for tomorrow. I know I covered a lot of scenarios tonight in the video, but don't forget tomorrow morning though, come trade this stuff with us. I know there's a lot to learn when you're a new trader, but the game plan's put together tomorrow morning, 8 o'clock Eastern time, every morning. The easiest way to make money in these markets, come out and learn this stuff and trade along every morning at the opening bell in our trade room. I'll put all the important links tonight. Don't you worry. Description of the YouTube video. Start first on the free video class, learn the roadmap, start making money on your own. Any questions, any issues getting started, use live chat, call the ops. I'm always here to help out every step of the process. All right, guys, the game plan is set. Hope you use this knowledge to make a killing tomorrow, and hopefully I'll see you sometime soon trading with me in the morning room, 8 o'clock Eastern time as an advanced member. All right, guys, hope you learned a bunch. Hope you use this knowledge to make a bunch tomorrow. In the meantime, be well, be nice to each other out there, will ya? And you better be here next time. Adios, amigos. Bye for now.